Bloomberg, the pound's best days may be behind it, even if the UK and European Union sign a trade deal. The relative cost of hedging against a weaker sterling through year-end is the highest since April, according to a gauge of positioning and sentiment. And over the past month, hedge funds and other leveraged funds have increased short bets against the currency, data by U.S. Commodity Futures Trading Commission show. While some investors are still holding out for a payday when a trade agreement is signed, others are looking further out and say the UK's economic outlook seems grim. For TD Securities, the damage the coronavirus continues to inflict on the nation's domestic output, which is more vulnerable now that the transition period from the EU is almost over, is hurting the pound's prospects. J.P. Morgan Chase & Co. estimates the currency will settle in the low $1.30s after the UK and EU strike a deal. The optimism around Brexit itself is fully priced in and a little too optimistic relative to where we go in the next couple of weeks, said Mark McCormick, the global head of foreign currency strategy at TD Securities. The investment bank's 2021 outlook recommends selling the pound if an accord is signed. Sterling had its best November since 2006, buoyed by the US dollar's drop and encouraging rhetoric from both the UK and EU on the possibility of a trade agreement. It rose to as high as $1.3441 this week, a few cents shy of the strongest level in a year, despite suffering one of the biggest economic slumps among developed nations in 2020. If there's a trade deal, we accept the possibility that GBP could overshoot by a couple of cents, call it 1.35, but we see little value owning GBP for what could be a very bounded, and potentially short-lived, relief rally. Paul Megassi, JPMorgan's head of global foreign exchange strategy, wrote in the bank's 2021 outlook, even if the UK enters a free trade agreement with the EU, 4% would be shaved off the nation's gross domestic product in the long run compared to where the economy would have been if Brexit never happened, the OBR forecasts. Failure to reach a deal, which means adopting World Trade Organization rules, would entail another 1.5% loss in GDP. Brexit isn't favorable for an economy that hasn't fared well through a pandemic, McCormick said. Copyright 2020 Bloomberg LP.